Where you live can change the cost of your car insurance by hundreds of dollars, and that's just one factor that impacts your premium. It's not just about one driver, it's about a whole system insurers use to measure risk. When insurers talk about risk, they don't mean danger in the everyday sense. They're really asking how likely are you to make a claim and how expensive might it be. So if you want to know how to get the cheapest or best insurance for you, here are 7 factors that might change the cost of your car insurance premium. First, your car. Insurers look at what it costs to repair, the availability of spare parts, and how likely it is to be in a claim. A high-performance sports car means high repair bills, specialist parts, and statistically, higher accident rates. All that adds up to a higher premium. A smaller hatchback with common, low-cost parts is cheaper to fix, less of a theft target, and usually less risky. That's why it costs less to insure. Next, age and driving experience. Data shows younger drivers, especially under 25, are more likely to be in car accidents. That increased risk is reflected in higher premiums. But with more years on the road and a clean driving history, the risk decreases. Where you live matters too. Postcodes with higher traffic, crime, or severe weather claims will generally mean higher premiums. Side note, insurers actually use detailed address-level claims data together with geospatial data like flood zone maps, bushfire risk areas, hailstone patterns, and accidental damage patterns to understand the risk tied to specific locations. This helps them assess how likely it is that a vehicle might be affected by natural disasters and accidental damage, even down to the street level. That's why 2 houses on the same street can have completely different risk ratings. Then there's where you park your car overnight. A car left on the street in a city is more exposed to theft, hail, and car park knocks. A locked garage in a low-risk suburb signals less chance of a claim and usually a lower premium. Your driving patterns are another factor that impacts the cost of car insurance. The more time you spend on the road, the greater the chance of an accident. Higher annual mileage, a history of speeding fines, or frequent long trips can all increase premiums. Now let's look at your claims history. A string of recent costly claims increases your risk profile and your premium. But a long period without any claims could potentially lower the risk. Optional covers are basically add-ons that give you more coverage for things like higher car cover or reduced basic excess for windscreen replacement. They're valuable if you need them, but they do raise your premium. Finally, the insurance settings you can adjust. Your excess is what you pay if you claim. The higher the excess, the lower your premium. But you have to pay more out of pocket if something happens. Then there's the insured value, which is the payout amount if your car's declared a total loss. Market value cover is usually cheaper, but it depends on the car's resale value at the time of the claim. Agreed value costs a little more, but gives you certainty about the payout. At Youi, your price isn't just about your postcode or car. It's how you drive and the choices you make. Start a quote today and take control of your premium. For more everyday explainers like this, hit subscribe.